Great. Well, welcome to Armanino's webinar, Practical Advice from an Auditor and Financial Services Provider. My name is Kim Anselmo, and I'll be helping with webinar logistics today. So before we get started, I would like to go through just a couple of Zoom webinar tips to help make your engagement easy with our presenters today. So you'll notice on your Zoom webinar toolbar, there's the Q&A box where you can click that to open the window and have a response to your presenters and click send. Just to let you know, we are going to hold our questions until the end of the webinar today. And if we don't get a chance to answer them at the end, we will certainly reach out to you personally and follow up with that. We also have a chat box. You're welcome to use that as well. We will keep track of that. And if you do have any technical difficulties, go ahead and hit the icon with the raise your hand, and I will get to you as soon as we can. And if you do want to lower your hand, you can click the lower your hand as well on your own, or I can do that for you too. We also want to make sure you have great audio, so you can go ahead and click on that mute, unmute icon box, and then you can click on the audio options and change them if you like. You can do a test of your speakers, and if you can't hear it, go ahead and do a drop down from where it says headset, earphone, and maybe select a different medium, and that might work a little bit better for you. But again, any audio issues, do raise your hand, or you can reach out to me directly. Lastly, this webinar today does qualify for CPE credits. So in order to receive CPE credits, you need to actively respond to all the polling questions and stay on for the duration of the broadcast. So if you do have any difficulties answering the questions or you didn't get a chance to complete it, do send an email to elevate@armaninollp.com with your name, date, and session, and we'll be sure to reach out to you to work through that. We do send out our CPE credits around 72 hours after the webinar has ended. And just to let you know, we do also record this webinar, and we will be sending out the PowerPoints and recording following today's session. So with that, I'm excited to announce our presenters and let them introduce themselves to you. So we have Mike Arell, who's a partner in charge of our national cannabis practice. And also today, Patrick Chung is with us. He's the president of MRB Pay.
Thanks, Kim. I'll quickly introduce myself. What we do here at Armanino, we provide everything from bookkeeping services to tax services, audits, IT consulting services, as well to the cannabis industry. Patrick?
Hi, everybody. My name is Patrick Chung. I'm the president of MRB Pay, and we work with the cannabis industry to help with their compliance needs and working with financial institutions for their compliance needs for the cannabis industry. And what we provide as a service are things like deposit services, as well as payment services like ACH, checks, wires, and things like that. So today's agenda, just so everyone knows what we're doing today, is we really want to help the cannabis industry understand the importance of tracking COGS to meet 280E guidelines. We want to help show everyone the connection between lending opportunities, accounting, and the boring thing called compliance, but which I love. And then really using technology effectively for finance and compliance, but really it's really about saving time and money by using technology. And of course, really what makes accountants and people like us very happy is really about the best practices for keeping your files organized, which will save you time and money by working with us and working with folks like Armanino.
Kim, we've got our first polling question.
Yeah, so to start off, we're going to launch our first polling question.
So please make a choice of one of those three answers there, and then we'll close the polling question here in a few seconds.
Yeah, so I'll close it out in about 5 seconds. Closing 3, 2, 1. So I'm going to end the poll and sharing results.
All right. Well, seems like everyone's mainly interested in COGS and 280E guidelines. So we're going to be starting with that topic, actually, the importance of tracking COGS. Now, in order to determine COGS, you've got to have really good bookkeeping and record keeping. And this industry really started, first in the black market, then in the gray market, now in the legalized market. And record keeping was not something that this industry was really well known for. In fact, there was, this line of thought years ago that, hey, if it's my word against the IRS's word, and so if I have no records, then I'm in a better position to argue against the IRS against an audit. But times have changed now, and you can't really have that philosophy anymore, because in a legalized market, you've got to have this bookkeeping. And it's because that what happens is that it starts with bookkeeping, and then that leads to having a good tax return, which leads to having a good audit. And then eventually, when you decide to sell the company, then you'll get the purchase price that you want to receive. When we start talking about COGS, it's a really a gray area where any two accountants will come up with maybe two different answers in how to calculate COGS for a cannabis company. And so I wrote an article about 2 years ago about how 471C can be used to enhance, your 280E deduction under COGS. And some people have taken that, to extremes, saying that, hey, 280E no longer applies. Others, like myself, use that as a tool to maybe enhance COGS a little bit. And so it's a very complicated area where, different people will differ in how they come up with their calculations. And so it's going to make a difference whether you're a cultivator versus a distributor, a manufacturer, or even a retail dispensary. Each one will have a different way of, computing their COGS. So, and one way doesn't work for, every company. You have to just look at their facts and circumstances and see what's going on and really dig into the details, where again, bookkeeping becomes really important to be able to have those records to go and determine basically line by line what qualifies and what does not qualify for COGS.
And Mike, if I jump in.
Yeah,
oh,
go
sorry,
ahead.
go ahead. Yeah, I just wanted to give a little wrinkle here too, from a compliance perspective. When we do the underwriting for compliance when it comes to creating bank accounts and offering things like loans and things like that. Now, for us, the reason why COGS is so important is that we need to know, hey, does this look too aggressive? Are we looking at folks that are really trying to push the envelope of what's acceptable, or are they staying fairly conservative? Of course, we like more conservative because that makes sure that we can feel comfortable with the team. We don't mind more aggressive interpretations of COGS, but we want a firm like Armanino standing behind that COGS interpretation. If it's some small firm or the cannabis company keeps changing their accounting firm, it makes us nervous, because we want to see fairly consistent types of COGS analysis as it, year by year. Because just like any other bank or any other financial institution, we're going to look at your tax returns too. And ultimately, we're going to call your bookkeeper and your accountant and say, hey, what's going on here? This looks right, or this doesn't look right. This is not what we see with other folks in the supply chain. What's happening, right? So the COGS question really leads into a transparency question for us when it comes to underwriting the risk of giving financial services to the cannabis industry.
Yeah, and it really is, it all comes down to documentation, because you can take a maybe more aggressive position if you have good documentation to, support why you believe you're entitled to that more aggressive position. We had a client that had $1 million audit assessment on them, and we were able to get that reduced to 80,000 because we had good documentation to show why we believed, that the taxpayer was entitled to that aggressive 280E position. And so without that, we wouldn't have been able to prevail. And it's, not something sexy, not, a lot of times, owners of companies are like, why am I spending all this money on something that doesn't generate me revenue? But, in the long run, it is going to help you, with audits. It's going to help you with your valuation when you get ready to sell the company. So it's either pay me now or pay me later kind of an issue that at some point it will have to get done. And it's much easier to do it while you're, in the same tax year while you're doing it than trying to go back and recreate something from 3 years ago when you may be using a different software system or something else that makes it much more difficult to get those records.
So Mike, I'm curious, let me tell you what we saw recently, but not sure if you see this. We've worked with cannabis companies and they say, especially when there's a buyer or some sort of lender in the mix, and they say, well, here's our tax return, but here's our other books that really show you how the business is performing. And we really, and not just us, but our financial partners also get a little nervous about that. They say, well, you shouldn't really be running dual books here. You should be consistent and apply that throughout, the company. And you shouldn't be running 2 sets of books. And not only is it more costly, but it also feels a little bit like, what do you want to call it? Let's just call it not good business practice. Well, are you still seeing this out there? Because we're seeing it once in a while. It's gone down a bit.
Yeah, I mean, certainly we wouldn't be participating in something like that. But the thing is that, there is a difference in your books in terms of your, books for GAAP purposes versus your books for tax purposes. Things like depreciation that you can take on the tax book records that you can't take on your GAAP book records. There will be those kinds of differences, but those are, highlighted, in the statements of the return. So the M2s, M3s, whatnot. So, there will be those kinds of book tax differences, but they're outlined and, there'll be workbooks that, detail what those differences are and to what extent. Yeah. Well, and finally, I'll talk about this before we move on. The impact of tax returns on your exit strategy and due diligence from the buyer. Time and time again, we hear people, talk about, hey, my company's worth 10 million, it's 50 million, 100 million, whatever. And that's all great. But if you don't have all this documentation that supports it, then, the days where buyers were obtaining cannabis companies just based on someone's word or their brand, recognition or something like that, those days are gone because there's so much competition out there now and so many other choices so that, they don't have to go with your company. They've got others to choose from in the same markets doing the same thing. And if your books aren't there, they're going to like, look, I don't want to inherit a problem and mess with it and spend a lot of money cleaning everything up. It's like, I'd rather just move on to the next opportunity and get someone that, has good management, has figured all this stuff out and sorted out these problems so that I don't have to deal with it.
And one last thing I want to add on top of that is from a compliance underwriting perspective. When we see COGS, we actually are also looking for things like money laundering, diversion or inversion of finance or products. Things can get buried, and our job with respect to the federal government is they want us to make sure we're doing our due diligence. And so it's really important that that COGS trail, if you will, I'm not going to call it an audit trail, but we need to see that those records be fairly clean so we can reinterpret those COGS if we have to feel more comfort that there's not some sort of shenanigans going on in the back end. Because it's really important that everybody, at least in our network, stays out of trouble, because if any one of them is trouble, it could negatively impact the rest of the network that we've got.
Well, and also it helps you because, by you doing your due diligence and then accepting someone as a client, then now they have access to banking, which then leads to, having a paper trail of, what income is coming in, what income is going out, who's getting paid, how much are they getting paid, when are they getting paid, all of these things that are details that, Yeah, it's somewhat of a pain, but it also is a really great benefit because now if there's ever a question about, hey, you got $100,000 that came in on Friday, where did it come from? Where did you spend the 100,000? What happened with the 100,000? And investors are going to want that same sort of detail too, because if they're going to invest in, a couple of $1 million into a company, well, then they want to know where that money went and how it was used and how was it spent. Is it really the way that the founders are saying that the money was used? Well, here's the bank statement that shows that it came in, it went here, and how it applied. And again, paying taxes and everything like that is much easier when you have a bank account than if you don't.
And one last thing, because that's a great point, is that some people have told me, well, it should go away with legalization. And I can tell you that the unfortunate fact is that because of the continuing high taxes that we see post-legalization, I don't think that's going away. When has the government ever given up on taxes they can impose? And in fact, that black market has existed so long, at least in California. Those are two big pressure points that require continued due diligence for all monies. So if you think about it, any bank going forward post-legalization, they still have to do the same review. So we don't think underwriting and our need to do this type of analysis goes away even post-legalization. How do you guys feel about that at Armanino?
Yeah, well, I mean, we've seen it with CBD, and the Farm Bill made CBD products, fully legal at a federal level, as well as in a state level. You have interstate commerce and everything else, so it's as good as it could get. Now, unfortunately, there's some issues with the FDA and the regs and the Department of Agriculture and whatnot. But at least from a banking standpoint, you would think that, hey, that would just open the floodgates to free and easy banking. And we have many CBD clients that are in hemp that are still having trouble getting bank accounts open because of the stigma that is attached to it. So I don't think that federal legalization is really going to help that much in terms of banking and the requirements and the bookkeeping work and things that are that we're talking about today.
And I'll tell you from our perspective, we are still hesitant to work with hemp companies. We've just felt that there are not enough compliance pieces in place that that will allow us to do our proper due diligence. So it's a really interesting viewpoint when you see what's happening in the legalized hemp world and all the problems that are still in place. I mean, it'll be worked out. It'll take time though.
Yeah, and I hear that Senator Chuck Schumer and Booker are going to make some sort of an announcement tomorrow about cannabis and a bill, I guess, that they want to pass in the House and Senate. And we'll see what that all entails. But there's certainly movement in that direction. But we'll see what's going to happen. I'm going to go to the next slide.
Yeah.
All right, we got our next polling question. Is your bank account in the name of a DBA, a management company, a cannabis licensed business name, a personal bank account, or you do not wish to disclose at this time? So please mark your answer, and we'll close out the polling here in a few seconds.
Great. It looks like we almost have everybody answering. I'll go ahead and close it in 3, 2, 1, and sharing the results.
That's actually really good news to see that so many people have a bank account in the name of their cannabis licensed business name. I'll tell you that when we first started the company, we saw a lot of DBAs, and there were a lot of problems with doing it that way, obviously, because they're not being transparent. And I'd like to talk a little bit about management companies, and fortunately no one's doing personal bank accounts anymore, although we did get an application recently where someone said that's what they're doing. From our perspective of banking and the actual bank account name, what the industry is moving towards is what 75% of you are doing now, which is in the licensed business name. And folks that are doing things outside of that are really risking a few things. First is that when the bank account name is not in the name of a licensed entity, you end up getting a lot of basically risk that the bank that's there will just shut down the account. The level of scrutiny required for a cannabis bank account versus a non-cannabis bank account are so different that the bank would rather shut down the account and hand over a cashier's check rather than try to rehabilitate that account. That's just one piece of it, right? The other piece of it is that I would caution folks that are doing, again, outside of licensed business name, that when under federal law, right, one of the key conditions of being able to legally buy and sell cannabis under state law is that the transaction must be between two licensed entities. So if the invoice says cannabis license A is selling to cannabis license B, but the money is going to a third party, right? It might be related, but the fact is the money and the product must go together. And at least from a compliance underwriting perspective, we want to give the opportunity to, again, provide the right bank accounts so they can start doing their transactions in the appropriate way. We don't penalize companies for doing that. We give them a chance to actually build that record with us. Mike, I'm not sure what you're seeing. I mean, if you saw one of your clients with a bank account statement in the name of a management company versus the license name, how do you guys handle that?
Well, in many cases, it's a separate, taxing entity, and so it may be part of a consolidated return, and so it gets wrapped up into the holding company, or it could be that it's a separate company altogether and it files its own separate tax return. So, we've seen a lot of management companies, put in place, and sometimes they can be used effectively. But there's a tendency to kind of overuse the management company for everything and try to circumvent 280E by putting everything into the management company and deducting everything at the management company level. And, that's just a very risky proposition when you go down that path and be that aggressive.
That's an interesting point that you make, because going back to our previous discussion, I mean, so if they're doing everything under the management company name, but yet they're trying to file their taxes and show proper COGS in the licensed business tax return, must be tough to reconcile.
Well, it is, because, some of those COGS that the management company is taking, may not be deductible at the operating level that is paying those management fees to the management company. So you got to be careful about that, and you got to outline what the management fee is for, so that you can get the proper tax treatment.
Right.
Hey, Patrick, I got a question for you. Suspicious activity reports, you have to file one of those every time there's a deposit of 10,000 or more, and many of my clients in the past have always been a little weary of filling out those forms because, they ask for a lot of, detailed information about who's making the deposit. They wanted their driver's license number and all this personal information. Are you seeing that that's an issue, or have you had anyone, have an audit or law enforcement go after anybody because they filled out one of these SARS reports?
Actually, the answer is no. And the reason is that, so all financial institutions, including us, are required to file these things with the knowledge or without the knowledge of the parties involved. And what we're doing is the federal government has asked all of us to help them build a record of all transactions. And so I have not seen anyone where they will use that information to go after individuals. What the FDIC does is they will use some of that information, and then when they do their review every year, there's like an audit, right? They'll send a letter, and they'll want to know, is that financial institution doing the right things with respect to oversight, to actually understand what that company is doing. So that's why you'll see sometimes where a bank who probably never knew they were doing cannabis somehow discovers, let's say let's say they have an account of a management company, and that management company receives a check from a known cannabis licensed entity. Well, the bank will report this under SAR that there's a cannabis transaction, and then they will generally just shut down the account. But they've now reported that transaction, all the transactions that have been related to that company that they think are part of cannabis. So now they're part of the pool of information of banks that have done cannabis transactions. However, that bank may not have an actual cannabis program. So they'll shut down the account, kick out the account, and try to, again, no longer work with cannabis entities. I have actually heard of banks that have a hunt and kill program. So what they do is they just run across all their transactions. They're looking for any cannabis business name, any license name that is known to do cannabis. And if they see any to or from transactions, they will actually go and just shut down that account. Because people might think, oh, that's so unreasonable. Let me give you a little sense of, again, not that we're sympathetic to banks, because no one's sympathetic to banks, but let me just tell you how they think of the world. So what I was told by the chief compliance officer of a very, very large bank, he told me inside their system, they need roughly one compliance person for every 100 non-cannabis businesses that they oversee. And if they decided to do cannabis, the regulators told them they will probably need to have one compliance person for every maybe 6 to 8 businesses, cannabis businesses they oversee. So you can see that the cost has gone up roughly 10x for the bank to support that business. And they can't support that kind of cost on a basic checking account that's not really generating any fees. Which is why when you see other banks out there, including us, we do charge monthly fees that are more than a normal checking account, because that's really paying for all the compliance work that we have to do in the background. So, for example, just to bring on a bank account, we have to do background checks on every control person, manager, board of director, and officer of the company. That adds up a lot. And then every transaction, we're running, our own compliance work on that. So it does start to add up, and you can see why banks are nervous about it, because that's what the regulators are requiring. They want us to know, do we understand what's happening at the bank and what's going on with the financial transactions? Which means, do we file the right SARs? Are we underreporting SARs? And we have to have, us and all banks, if the auditor comes in and says, give us information about this transaction, we have to show them all the diligence we did per transaction. And that can be very costly for a bank to know about. So fundamentally, it's about, the SARs isn't really for the federal government with financial institutions, less for the actual individual. So I've never seen an individual be pursued for a SAR.
Yeah, and that was a great explanation, because, I'm sure many in the audience are wondering, like, hey, why can't my local bank that I've been banking for 20 years, handle this now? And, we've had situations where, maybe the grandfather or the father of this, family run business, for 2 generations or something like that. And now there's a grandson, granddaughter, someone in the family that wants to get into cannabis. And they just want to open up a bank account at the same bank that the family's been banking for 20, 30 years, whatever. And that was a great explanation why, it's not as easy as it would seem to be, So, right. Yep. All right. I think we're ready to move on to the next slide there, Kim.
Oh, was there no poll question? Let's jump in then. Oh,
we have another one?
I don't remember.
I think we don't. Okay, so we're going to go on to...
Yep, I can run into the next poll question here, the next topic.
Okay.
All right, go ahead. So how would you describe your scenario for managing financials? It's a manual process relying mostly on spreadsheets. We have an outsourced provider to handle our finances. We rely on entry-level solution for managing our finances. And then finally, we are fully automated with all our business systems. I'll be curious to see how many people pick number 4. All right.
Okay, we're just about there. I'll close it here in 3, 2, 1, and I'm going to go ahead and share.
Yeah, and that's what we're seeing is everybody's relying on some sort of a manual process, and unfortunately, there's some of the commercial available software that's available to other industry groups are not available to cannabis companies, and so many of them are just using spreadsheets to Excel and whatnot to manage these things.
Yeah, and we see this as well. Oh, go ahead. Sorry, Kim.
Oh, I'll go ahead and jump into the next slide here as we start talking about this topic. There you go.
Yeah, since we do a lot of due diligence on our companies, we do see what we see matches actually what that poll has, which is it's a lot of folks doing it by hand. And it's really tough when we have questions. And sometimes we have to turn to folks like, to Mike and say, hey, Mike, do you have this stuff? I mean, obviously with permission of our client, right? Because we need to get it in a form and fashion that is concise and fairly recently dated. We can't go back and looking at data a year ago is not as useful as looking at data from last month. But so Mike, what are you seeing out there?
Yeah, I mean, what we're seeing is that, it just makes a big difference as to, where in the supply chain are you in this industry? Because what works for a cultivator is not going to be the same sort of program that's going to work for a manufacturer or a distributor or a retail dispensary. Each has their different needs, different SKUs, different, things that they need to keep track of, not only for, tax purposes, but just for normal financial purposes, just to know how are they doing, are they pricing their products correctly, because, you go by what you think it should cost, but, I'm sure no one is really using, cost accountants to figure out, hey, how much should I charge for this gram? You're going to get what you get, and then you go on from there.
And to make let me tell you about what some of our most successful clients do, or at least when I say successful, I mean they are making money, but they're also using us in a way that is efficient from a time and labor perspective. If we can hook in with some of their APIs, which means they give us permission to pull data from their software stack. What that allows us to do is allows us to do our due diligence without having to bother anybody, so that we can just pull in the data and go, yep, this meets our compliance underwriting, and this therefore would meet any bank's underwriting as well as the regulatory requirements of the auditor, right? So that when we look at the transactions, it makes sense. So what do we need? We need things like metric ID, right? Pretty basic stuff. We need to see the invoices. We need to see things like your accounting, financials, things like that. And then we pull that data in and harmonize it so that we feel comfortable with doing, again, the underwriting. Because if just let everyone know, when we bring in a deposit and when we make a payment, by definition, the federal government considers that money laundering because it's illegal under federal law. So the way you work your way out of that conclusion is that the Department of Treasury has given guidelines to say we can provide that financial institution access so long as there is an ability to do that due diligence. So the federal government's not asking us to be God. We can't see everything, but they are asking us not to be dumb. So they're saying, do due diligence. If you see something, pursue it. Look for something. Don't, and don't just gloss things over. So the more data we get, it actually makes us feel more comfortable, first of all. And second of all, we can then bother you less, because the last thing you want to do is spend time with us trying to justify what's the source of cash for this, why do you receive this deposit? And why are you making this payment? The more that's automated, the happier you are. And most of our successful clients do feel that we are a true partner for them in helping them just move and making their operations more efficient, which again, we're outside technology. Go ahead, Mike.
So Patrick, do you like test these systems where you'll do like a sample and just see, hey, if I take a random sample of data and then the result should be, X, and you test it against that and see that, hey, you got the correct number that you thought you were going to get, then does that help validate the system itself and then give you confidence that, okay, the program that they're using is collecting all the data, it's reporting it correctly, and there's no errors in how it's collecting all of this information?
So I think that methodology would be fantastic, but we don't require that of our cannabis clients, mainly because that kind of testing we think is burdensome, if you will, on our clients. So we've listened to our clients, and we realize that we can get probably 95% of the way there just by reviewing their tax returns, looking at their financials, and we can see the data. So we can just see on our side if it looks like it makes sense or not. If it's out of whack, we'll know. And so we don't need to test the data. We just say, well, wait a minute, your tax returns say this, your revenue says X, and your books say Y. What's going on here, right?
Yeah.
But just looking at expenses and COGS, like, well, wait a minute, you're off by a factor of 2. What's happening, right? We can accept some wiggle room. We're not asking for surgical precision, but we also can't accept something that's like a truck-sized hole. That's not going to work either.
So that brings us to our next point, which is what is the most important use of your technology budget? Because everybody's constrained by budget. Even Fortune 500 companies have a budget of how much they can spend on technology, and so you've got all these different stacks that you can choose from. Some that will take care of finances, others that will take care of your supply chain and POS systems and ERP systems and everything else. And so I think it depends on each company's situation as to how they're going to allocate those funds. But I think at a minimum, they got to have at least their finances in order, because everything is derived from that. Your banking account with you, Patrick, is going to be derived from that. My ability to do the tax returns comes from that. But certainly there's other software that needs to be considered as well. And heck, we have a lot of clients that just use QuickBooks, and that's all you may need. And it doesn't need to have to be this robust system like an SAP or Oracle system that other large corporations use. You can get away with quite a bit with QuickBooks. And I mean, do you find QuickBooks to be a sufficient program for you guys when you're doing your due diligence?
Absolutely. So not only is QuickBooks sufficient, actually majority of our clients use QuickBooks. I mean, it's such a simple way to get started. I would say some of our larger clients obviously have moved on from QuickBooks, but when we watch them evolve, definitely getting that baseline started, not just of the software itself, but the discipline to actually connect and input that data into QuickBooks. I think that's an important discipline as you move on to a different type of technology stack for financials. I would say though, to me, the way I try to look at technology budget is the marginal cost of somebody doing something, right? So rather than having, let's say, a full-time bookkeeper, maybe someone accounting can enter things in QuickBooks. Well, it makes it actually easier over the long run to have that person use software plus a person. That same thing goes for invoicing, right? I've seen people use a very manual invoice system. Well, over time, I mean, we really recommend you got to get that much more integrated into your supply chain software, because the amount of times that we're going to ask for an invoice is enough where you should just make that automated for us, so we can just pull what we need to make sure that we can do our due diligence, because you don't want someone spending all day with us. You want them creating value for your own company. And those kinds of marginal benefits, I think, can be assessed probably by person hour in my mind.
Yeah, and that also creates a lot of human error. The more that people are physically working on something, and it's not an automated process where it's scanned and reviewed and entered into a program, it just makes it so much easier, quicker, and faster.
Absolutely.
The final thing that we have to talk about here on this slide is about scalability and expansion considerations. And, each company, again, will be different in how fast they're going to be moving, but, you need to be prepared to have something that is robust for what you have currently. But then, this industry grows at such a scale that, I've seen companies that start with, 10,000 a month in sales, and then the next quarter they've got 100,000 a month in sales, and then by the end of the year they could be at 1 million a month in sales. And so with that kind of rapid growth, you've just got to be prepared for those contingencies.
I'll tell you something too. We've actually seen cannabis banks kick out clients because they've grown too fast, because it freaks out their compliance team and they can't get to the bottom of it. They can't get to the bottom of it because they don't have the technology budget, the software to actually quickly justify, hey, I'm growing, this is what we're doing. You can see it very easily and just deliver documents to your bank to understand that, help them understand why you're growing so quickly. Because we want you to grow quickly, and actually the bank wants you to grow quickly. But guess what? There's a compliance person in the back saying, this is pushing the limits of our risk tolerance because we're not getting documents fast enough to justify why you're growing so fast. All you see is money coming in the front door and money going out the back door. And that just makes everybody nervous.
Yeah.
Fortunately for us, we are solely focused on cannabis, not even hemp. So we understand these growth opportunities, but it does make everybody's lives easier if there is a fundamental foundation of some technology to help us get comfortable with what's going on.
Yeah.
But one last point though, I will say that from a scalability perspective, we've actually seen companies just really push limits of their software. And we think that's okay because we know that there's not necessarily people knowing that, well, Mike, you can probably talk more to this, but they feel like they're going to be sold soon, right? There's an M&A exit coming. So they don't want to invest too much in technology. And there's always that push and pull. We're okay with people pushing the limits of the scalability of their tech, but we do think at a certain point, it's better just to invest a little bit more and not rely on an exit to sort of save them from themselves. I mean, what's your sense?
I agree with you completely because, it's this push and pull mentality that they have to, deal with, and I make the analogy of Steve Jobs often about how he grew Apple to this, amazing, huge company. And then, at one point, the board of directors fired him, because hey, he knew how to build a company, but he didn't know how to run a multi-billion-dollar enterprise. And these cannabis companies are going through that same sort of transformation where they start off small and they grow so quickly, so fast that, they have to have a means to be able to, deal with it. And at some point, the leaders of these companies have to, like let go of their baby, if you will, and let them focus on what they know how to do and do well, and then hire professionals to handle all this other stuff. They need a CFO, they need a CEO, they need all these other C-level executives that maybe were in food and beverage and other industries that can bring that knowledge over to the cannabis industry and help them get to where they want to go.
Right. I mean, to that point, I'm working with a company right now and we're trying to bring them in. They're on their third CFO. They just can't get a handle of their operations. I mean, they are growing so fast and so much money's going in and out. They can't pick a date to figure out when they're going to cut over and just commit to this new system. And we're like, hey guys, you don't have a handle on what's going on. We can't figure that out for you. We're the tail on this dog. So when you're ready, you let us know. But again, it's such a shame because if they could use our solution, then they can rely on cash less, right? Of course, if you have cash, that's fine. We're happy to pick that up. But point is, like, they're stuck in their old system because they can't find a way out of that quagmire they're in. And that's really a limitation of the technology, we think.
Yeah. And you get stuck in this routine and it's a vicious cycle where it's like, well, why are you doing it this way? Well, that's how we've always done it. Well, you got to really kind of think outside of the box. And if you wait too late, then it becomes just a much more difficult task to try to make that transition.
Absolutely. Oh, so, there we go.
Here we have some of the things that we've kind of talked about why software is important. certainly it will, have an effect on productivity and compliance. Accuracy is what you're looking for, obviously, Patrick. And then, the quality is going to be important as well, because, we've talked, at length here about how on your exit strategy, you want to make sure that those numbers are good and they're verifiable. And, you certainly have to have these financials. And, we see many investors that want to get into this business, but they're, unsure of the quality and the accuracy of the financials that they're being presented, because, the pro formas that talk about, how they're going to grow the business, 500% in 5 years or even 2 years. That's all pie in the sky stuff. You need something that you can rely on. And now I'm seeing that, most of the companies that are looking to acquire other cannabis companies, they want a good track record. They want to see 3 to 4 years of tax returns. They want, balance sheets that actually balance, income statements, all the normal stuff that we think nothing of. But in this industry, it's still a foreign, concept to many.
Right. I mean, I have nothing really to add. You said it perfectly, Mike. For us, again, the more software-based compliance that we can do, the better everything is. And we actually have investors, for example, they'll park their money with us, waiting for the cannabis company to figure it out. But they don't have infinite patience. They'll wait a few months, but then they're out and they'll just take their money with them. And we've seen that happen, unfortunately.
Exactly. And then the next slide there, Kim, I think, this just gives you, a really broad overview of all the different types of, technology stacks that are out there, and how each one of these, apply to a different segment of your business. And so you'll see some that apply to, payroll services, some that apply to, solving, compliance issues, others that, deal with HR problems and things like that. And so again, there's not one magic, stack that's going to work for you, but it's just a matter of, engaging a firm that will go through all these different, solutions and figure out what makes the most sense for you at your stage that you're in right now, and what can you scale up to in the future.
And the only thing I would add to this is that if a cannabis company out there is looking to do work with any of these folks, just make sure there's a good API that your people like us can work with. Because as long as we can get the data and then can verify that data, then we're happy. And that should make your lives a lot easier.
Yeah. And it just makes it, we're doing everything remotely ever since, we had COVID and everything. And so the more automation, the more things that are done. I mean, we're even doing audits now remotely because that's how we've been able to develop and mutate, if you will, with this COVID virus. And so, having all this data and everything electronic, where you don't have to go physically to someone's facility. I mean, Patrick, do you have a team that would actually go to someone's facility to look at paper records?
Not for paper records, but we do an on-site visit. So
Okay.
we still have to do that. That is required. The regulators like it, our bank partners like it. And frankly, our clients like it too. They like knowing that we care enough to send someone out there to meet them face to face for the final piece. Of course, I meet with them, as needed, but that final, on the compliance side, we do send someone out there.
Yeah. And I think it's a great policy because, I like to hear the story. I want to, see the facility. I want to hear about how they started the business and what their, hopes and dreams are, and how we can maybe help them get there.
Exactly. Yeah, not much time left. Sorry. We like talking. So the last poll question.
You want to take that on?
Sure. So we'd like to know roughly what's your level of file organization? Is it like a teenager's room? It's just, it's somewhere, but it's under something. Or is it like a hospital? It's very clean and organized. Or is there no organization system in place at all?
Great. I'll leave the poll open for just a few more seconds. And closing in 3, 2, 1.
That's great news. 57%. Have it organized. And it's not, when I say the teenager room, it's not a negative comment. It's more just an opportunity to do things a little better. Kim, if you don't mind, maybe going to the slide with that. Yeah. So this is, I used to be a lawyer at a big law firm, and a lot of my clients would come to me and say, how do I organize my life so we can sell the company or get financed? Again, very similar to what the cannabis industry needs. And this is how I just explained to them. Here are your basic 7 things that most people care about. This is not everything. You may have a data room request that's much more finely organized, of much more detail. But if you're going to just have some buckets, if you're going from teenager to grown up, let's say, put roughly your files in this order and these kind of buckets in chronological order. That's kind of the easiest way to start the organization process. It's really about consistency, because once, let's say, Armanino comes in or we come in, it's really about just being able to point to a box and saying, that's where our stuff is, go look there, right? Or if it's online, you have an electronic data room, you can just dump things in there, but just have a consistent naming protocol so that maybe it's by date or something, but in the right bucket. And that would just help us and bankers and lenders and accountants all really focus on what they need to focus on. So for example, if a lender comes in, they're probably going to shoot straight for your financial statements, look at your licenses and see your customer list. They're not going to care about litigation. But for me, as someone who's doing compliance underwriting, I'm going to look at really the financial statements, of course. And I really want to know, well, were there any government investigations? What happened? How did you resolve them? Just to make sure there's, everyone is being very transparent with not just us, but also with any regulator. And of course, we want to look at your licenses. And what a lot of people don't understand is that, hey, if we get your application that you submitted to the, say the Bureau of Cannabis Control, a lot of that information is stuff that we need anyway. So if you already have it organized here as an application, then just make a copy, hopefully electronically, and send it over. We'll give you a secure uplink so that you can just dump it there, and we'll take a look. And that just makes your life easier and our life easier. So I'll give you a quick anecdote here. So we were, for example, we work with our clients to, again, with the underwriting and compliance work. And some clients take less than 2 weeks to get a bank account because they have everything organized. Some are still working on it and they're just digging for stuff. And it shouldn't be that hard because you guys get busy, right? Everyone gets busy. So they don't remember, oh, I got to get that file. Where was it? I'll look for it later. Well, later's later. And so we can't open the account until we get the information we need because, again, we're underwriting the compliance. So if we don't get there, we don't get there. But Mike, what do you think? Is this roughly what you guys would be happy with, or is there more here that I missed?
Oh, I would be so happy if I had a client that had all of this organized and ready. They never do. I mean, it's like pulling teeth sometimes, but and certainly the companies that are going under audit are going to go through much more detail and scrutiny than what you have, here, because they have to tick and tie, these numbers to make sure that, hey, the number that is presented here is the same as the number presented, in another workbook or something else. So it gets very, tedious, but, this is really an excellent, cheat sheet, if you will, to kind of go through and, hey, if you get at least these minimums in there, then, it's just going to make your life so much easier on multiple fronts. And that's I think the takeaway that I want everyone to get here is that, yeah, this sounds tedious and a lot of work, and you don't have an extra person that's gonna, do this full time to just, drop everything and get this done. But, the longer you wait, the more and more it's going to be a problem. And then you will have to have somebody that, for a month or whatever, is just going to have to drop and change their role and say, okay, I'm going to dedicate myself to getting all this stuff organized.
Yeah, I couldn't agree more.
Yeah.
So Kim, do we want to hit a couple questions? Do we have time?
Yeah, so I was taking a look. I don't see any questions. So if anybody does have any, do go ahead and answer them in there. Otherwise, Mike or Patrick, do you have any closing thoughts for our audience today?
Mike, I'll leave it to you. What would you like?
Yeah, it was similar to what I was talking about earlier. I think that, this is an area where, you just got to focus some time on it. And it may be something that you've put off for a while, but, it's going to come up sooner than you expect. And we're having clients where they were not planning to sell their company for maybe another 2 years or 3 years. Things with COVID kind of put everything on pause. But now that we're coming out of COVID, I'm seeing so much M&A activity and all these companies that were like not really prepared because they thought they had time to get all their act together. Now we're finding that, wait a minute, somebody's willing to pay us top dollar for our company. And, they love our brand. They love, the story behind it. They have all these great attributes to their company. But if they were to ever dig into their records and find out that, hey, it's such a, their records are in such shambles, then they're going to be very disappointed that maybe a great opportunity to maybe join another group or sell out to their, to a competitor or someone, that's going to go by the wayside because somebody else has already done that due diligence work and is ready.
Yeah, and from our perspective, when we see a client that's organized and they have an operating account, with us, what makes me very, very happy is when they don't even ask us. They're just pulling statements off of our, of our system. They're doing all their payments, all their deposits. They're just happy little clams. And then we find out, hey, they're going to be sold because, everything's in order and they're off and running. So it's great when neither party is actually bothering each other, right? Because we're not bothering them for diligence. They're not bothering us because they can't get what they need. But there's real records and real banking. And we're very happy when they're happy. If our client's happy, we're happy. That's all, bottom line. And that comes hopefully with some organization.
Yeah.
Well, great. Well, hey, Mike and Patrick, thank you so much for all the information. You guys have done a great job. I do want to just let you know that we have some additional resources here if you're looking for some more topics around this cannabis industry or the topic that Patrick and Mike were covering. And we do want to thank you for joining us, and do take a moment to complete our survey as you exit out of the webinar. Thank you, Patrick and Mike.
Thank you, everybody.
Thank you.